I'm JD, still here with Jay Woods. Jay, we were talking, of course, about Circle's IPO.
Yeah.
What does this mean for you in this moment? What are you following as a longtime market maker yourself?
Well, when IPOs come to the market, that's a good sign that things are moving along. And we are only 2.5%, 3% away from an all-time high. This market has been climbing a wall of worry. If you read the headlines, you would be shocked to see that with all this tariff talk, we are now on the verge of 6,000 in the S&P 500, and then soon all-time highs. I don't know if we're going to get there, but when you see a big IPO and a lot of hype for this one, it means retail's hungry for something, and I'm glad we have something to offer them here at the New York Stock Exchange today.
Given your longtime experience as a DMM, talk to me about how price discovery works, especially for a day like today. We get this range, the buy, right? I think you've called it a sandbox before you kind of get in there, and it takes a while for that first trade to clear.
It's fun, it's stressful, it's exhilarating, it's a lot of things. I'm bold for a reason because I've done a few of those, but no, it's the company's day. It's about them going public and passing the baton to their market maker, to the New York Stock Exchange, to represent them and let the stock exchange people stress over how it's going to go from here. But yeah, this is a day we take our time. We try to get it right. So people know that it's already priced out of the range. Okay, that's good, strong demand. The retail demand seems to gonna push this price a little higher. How high, that will be determined as we go through the process. There will be price indications, price discoveries, and a crowd of humans using their judgment to get it together. And that's why that human judgment is so vital here at the New York Stock Exchange. Have that one market maker and the brokers come in. Could there be some yelling and screaming? Yeah, perhaps. If I was in there would be. But I'm here with you, and I get to talk about the market now. So having an IPO, 3% from the all-time high, this could be a good sign of things to come. We sure hope it is.
Yeah, I want to ask you about the broader market because we did have a pretty notable gap up back on May 12th. But what's interesting, we've been in this really tight range for the S&P between about 57.70 on the downside to 59.90. It's within 3% for 17 consecutive trading sessions. Is it a skittish market? Is it a wait-and-see market? What's going on as of late?
It's a little of all of those things.
Yeah.
But the good news is we're making higher lows. So it's constructive base building, as I like to see. We had a huge sell-off, tariff concerns, uncertainty, still there. But we keep walking it back. Now we're getting closer to deadlines. We're supposed to have 90 deals in 90 days. I think we have one wonky one with England, but the market doesn't seem to care. The market believes that this too will pass, and it's on the precipice of new highs. Will we get there? What will that catalyst be? Well, we'll see. Technology's coming back in a strong way. The semiconductors are looking strong. NVIDIA didn't take us there, but Broadcom's after the bell today. I'm watching that one closely. Price action's telling us good things are on the horizon. We'll see how they guide. But, this sideways action is constructive. Sideways is a direction. We talk about this a lot. And if we can break up, then not only will we hit new highs at the end of this year, I think we'll be very happy with the direction of this market.
Yeah, we've been back above the 50-day as well as 200-day moving average. Let me ask you a bit of macro talk because we do get the crucial jobs report tomorrow. Talk to me about considerations, Jay, that you think Jay Powell and his colleagues at the FOMC, they always say they're data dependent.
Yeah.
Got a few more variables in the mix these days, given tariff uncertainty and, of course, pressure from the commander-in-chief directly onto the chairman of the Federal Reserve.
I think that pressure's the least of their concerns. Jay Powell is just gonna, he has pivoted from one data point at a time to concerns and uncertainty about the tariff situation. This is what we want to hear from them. They go quiet after tomorrow. So this is the last big piece of data. ADP numbers, jobs not increasing like we wanted to. Continuing claims, people staying out of work longer. So on the labor front, there are concerns. These are concerns that could cause them to cut. Inflationary data has been positive. It's been stable. It's not getting to their 2% mandate, but they have enough data to justify a cut. It's that uncertainty talk that we continue to hear that has put them on hold. Trump got in his ear, said, listen, we want you to cut. The ECB cut again today. So there is room to cut. What will the market will do with the 25 basis point cut? Probably baked in at this point, but it's going to be interesting to see that number tomorrow. Any shock to the upside, and then the cut at the next meeting will grow louder. I think there's still one meeting away. We'll wait till the end of July and then take August off. So it's going to be interesting when that jobs number comes out, and if any comments from the Fed come out tomorrow, because the next week up until that Fed meeting, it's quiet.
Yeah, we'll see if there's a bit of a narrative shift. Jay, thank you for staying with us through our technical difficulties. You are a total professional here in our community. The great Jay Woods, my good friend, Chief Global Strategist at Freedom Capital Markets. My man, thank you so much.
You got it.